Hey crypto friends, this is going to be video number 12 out of my Crypto Trading for Beginners series, and today I will be talking about how to manage your overall risk while trading the crypto market, and I'll also talk about some common mistakes to avoid regarding risk management as well. But before we go ahead and dive further into the video, for those of you who are looking for a solid exchange to trade crypto futures on and would like to try the same exchange that I use on a daily basis, feel free to go ahead and try out the Blowfin exchange here, and you can find a link to it in the description below this video. All right, guys, so if there is one skill that really separates successful traders from those who gamble and blow up their accounts, it's absolutely risk management. All right. We all know that crypto markets are extremely fast, they're extremely volatile, and they are very emotional as well. And without proper risk management, even the best trading strategy will not save you in the long term. All right. The goal overall is simple. All right. It's to simply protect your capital so that you can keep trading the next day. All right. So what I'm going to do here is I'm going to go through the most important risk management best practices that every single beginner crypto trader should always be following. All right. So the first one is going to be never risk more than you can afford to lose. All right. And this one might sound insanely obvious, but it's absolutely true, all right? And quite frankly, most beginners ignore this. You only want to be trading with money that you're comfortable with losing, and you don't want to be doing things like dipping into your rent money, your savings, or taking out loans just simply to trade either, all right? Think of trading capital as business capital. If you lose it, the business can no longer operate, all right? So that's why it's extremely important to never risk more than you can afford to lose. Now, number two is going to be use proper position sizing. And this is something that a lot of beginners fail to do also. This typically means controlling how much of your account that you're putting at risk in a single trade. And honestly, one of the most common rules is to only risk 1 to 2% of your total account per trade. And an example of this is if your trading account has $1,000 in it, you should only be risking a maximum of $10 to $20 per trade as a beginner in each trade. All right, that would be your 1 to 2% mark. Now, this way, even if you lose multiple trades in a row while you're learning, you will still have plenty of money left over to recover with and to keep trading with and to keep learning. All right. Now, the third thing is to always use stop losses. All right. And this is once again another thing that most beginners ignore, which causes them to fail. But a stop loss order closes your trade automatically when the market moves against you. So if you buy Bitcoin at $25,000 and you set a stop loss at $24,500, then your max loss is only going to be $500 because it will automatically take you out of the trade to prevent larger losses if Bitcoin drops further than $24,500. All right. Now, without having proper stop losses, your emotions will 110% take over and your losses will end up spiraling out of control. So always, always, always be using stop losses. This is honestly one of the things that I struggled with when I was getting into trading years ago myself. All right. I didn't use stop losses. I ended up losing all kinds of money because I ended up chasing those losses as they went further and further down. And as the coin kept going further and further down, I kept telling myself, it's probably going to reverse at some point in time and it's going to go back upwards and I'll be fine. Nope, that never ended up happening. I ended up losing a ton of money because I didn't use stop losses. These days, I don't trade without a stop loss. I have a stop loss on every single trade that I do, and it allows me to be profitable on an everyday basis. All right. So number four, the fourth thing is do not over leverage yourself as a beginner. All right. If you are trading the crypto futures market, leverage can multiply your profits, but it can also multiply your losses as well. All right. And beginners, they often get liquidated and lose all kinds of money due to greed from using high leverage, such as 50x or 100x. So to mitigate this, stick to lower leverage amounts until you are able to be consistently profitable. And remember, leverage does not make you a better trader. It just magnifies your risk is all it does. All right. Now, number five is going to be always take profits along the way, all right? And the reason why is because greed kills beginner trading accounts just as much as fear does. So instead of waiting for the perfect top in the charts, What you want to be doing is you want to scale out of the trade in various steps, all right? Like a ladder, for example, all right? You're constantly climbing, one bar by the next, all right? For example, sell 25% of your position when you're up by 3%. Sell another 25% at 5%, and then let the rest ride with a trailing stop loss or something like that, all right? This way, you end up locking in your gains and your profits while you're still giving your trade room to run, all right? Now, number 6, the last thing that I've got here for you is going to be managing your emotions, which is honestly another thing that beginners that tend to forget about, all right? And it's honestly one of the hardest parts of risk management since it's all about psychology. But you want to avoid revenge trading after a loss, all right? Don't FOMO into trades just because of hype or giant green candles, and make sure that you end up staying disciplined as well, and always, always, always follow your trading plan and not your emotions. And a good way to control those emotions is to simply write down your trading plan and always refer back to it during times when you're feeling over emotional. Realistically, I have a trading plan that I use for every single trade. I have a trading plan and I have a trading log as well. I write every single thing down, and it's what helps me to be able to be a successful trader in the long term. Now, guys, overall, you have to remember that trading is a skill, just like any other skill out there, and it takes months, if not years, to truly master, just like any other skill. All right. And even when you are a seasoned trader and you're very, very good at trading, you're still always going to be learning more and more. All right. But when it comes to risk management, protecting your capital is absolute key to surviving and thriving in the crypto trading market. All right. So now in the next part of this 17 video beginner series, I will be talking about emotions and how to avoid certain emotional decisions while trading the crypto market. But before I go ahead and wrap up this video, if you guys are serious about learning crypto trading and you have not already joined, then I would like to go ahead and invite you guys to my premium crypto trading education Discord server, where you can do things like ask me questions, you can get one-on-one help anytime you want, you can see how I trade in real time, and you can get even more in-depth knowledge on trading in general. And you can find a link to join that server in the description below this video as well. Outside of that, though, guys, if you guys enjoyed this one and you feel like you got some pretty decent value out of it, please be sure to go ahead and subscribe to the channel. Hit the like button below the video to help me out. And with that said, for those of you guys who stuck around and watched this entire video throughout the whole thing, thank you guys for watching. I appreciate all of you, and I hope to see you all in my future videos.